What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol BBIG for Vinco Ventures. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just yesterday. Remember some of the critical criteria that we discussed for a continuation move, the main one being volume down below, and you can certainly see that we did see that uptick in volume, so it does check out as being a momentum-style type move. Now, that being said, if it's going to see and experience continuation into tomorrow to some of these upside targets, volume yet again would have to continue to increase here. If volume tapers off and this thing starts to go sideways, I would imagine that anyone who got in down here or even here who is looking for a quick buck, right, those people turn into overhead supply and start selling as we move lower underneath their entries or close to their entries. It's just going to be some added selling pressure as those people take profits if no new eyeballs come into the stock, aka more buying volume down below. So just to give you a number to watch out for, I would want to see at least 8 million shares plus per 30-minute bar. Otherwise, once again, you're just going to see volume dry up, people get out for their profits, and the stock will probably come back down into this lower drift zone like it's been doing over the past couple of months. So those are my thoughts on volume requirements. In terms of levels to watch out for, let's quickly come in with the Fibonacci's from the low all the way on up to the high. And what you'll notice is your 38.2 of the entire move is roughly at that daily breakout point, the 326 from this level right here. So any consolidation that happens here, fine. And again, that can happen on low volume. As long as we're above that level right here, it would turn into a daily daily and 30-minute bull flag, right? Eventually, the volume coming back in could break it out up and over 378. Our targets would be 430 and then $5 psychological number up here coming from, let me go ahead and scrunch that up and illustrate where this prior support point led to a nice bounce here, then resisted on that little test right there. So that's 5 and where it's coming from and kind of the requirements for the bull flag, right? Anything underneath 326 on volume that's decreasing, something like looks like this over time, step away. You know you're not going to take advantage of downside. If we come on over to the trade tab, this is a hard to borrow stock, and the put volume here is actually much better than I remember. So this is fairly surprising. This one kind of caught me off guard. Maybe I should have done a little bit more looking around first, but 12,000 contracts going through on the $3 strike with a 1 penny spread. It's not the worst thing in the world, but do note that these are extremely cheap options, especially the ones expiring tomorrow. If you even go out a week, there's some okay volume here, which again is fairly surprising. Maybe those 5,000 contracts went through as a block, some sort of ratio spread, butterfly, who really knows? But there's some liquidity here, which makes it a little bit more attractive to maybe playing some downside, but ultimately I would kind of just stay away. I just wouldn't be fishing for longs in the case of a breakdown of 326 as we've mentioned for that bull flag area. Again, anything underneath likely takes us back down lower towards 263, the breakout point initially, and quote unquote the scene of the crime from right around in here. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.